Today I'm going to buy Monolithic Power, a company with ticker MPWR. The current price is around $1,300. Going through TipRanks, its smart score is 10. Let's know what it is. Monolithic Power Systems specializes in the creation, promotion, and sale of advanced semiconductor components for power management. Their innovative solutions cater to a broad spectrum of industries, including information technology, data storage, automotive, etc. It belongs to technology sector. Its industry is semiconductors. The CEO is Michael R. Hsing. It has 4,500 employees, and it is headquartered in Florida, USA. One thing I also need to check is its next earnings report, which is 4th of November 2026. And before that, it was on the 30th of July. So we're not near it today. So that means we can buy it. Let's look at its company deck. This is the investor overview for Q2 2026. If we look at the revenue, it's good that it keeps increasing from year to year. And in 2025, it was $2.7 billion revenue. And the expected revenue in 2026 is $4.1 billion. So the CAGR is 27.8% from 2018 to 2026. That's the smooth out growth rate every year, which is a really good number for growth, 27.8%. Let's look at where the offices of the company are located. It does show that it has presence in the USA and also Europe and Asia. The company was founded in 1997. Its IPO was on 2004. Its number of employees worldwide is larger than 4,900, almost 5,000. That's quite a large company. And its number of products is 4,000, and its revenue in $2.79 billion. Okay, let's look at the customer diversity. 43% USA base, 37% China. That's really good. That's a large portion in another large market. And the rest of the world, it's 20%. So it has more than 30,000 end customers. The products, the diversity of the products, it receives revenue of 26.2% for its storage and computing. And then for enterprise data, it's 25%, and automotive 21%. And that is the large portion, and they've got some small ones in communications, consumer, and industrial. So it's very diverse. And then, let's check out its innovations. It has innovations in data centers. For data centers, the power delivery chips from APS, they sit right next to AI accelerators like NVIDIA GPUs, converting and regulating voltage for servers. And it also has innovation in robotics. It has robotics products. It has the world's smallest coreless motor solution. And then it has wireless charging for autonomous robots in 2025. And it's automotive, 8 times faster ADAS sensors. What are ADAS sensors? ADAS is driver assist systems. It makes digital cockpits 70% smaller, and it also gives charging solutions for 800 volts, which would be appropriate for EV cars. How do the products reach its end customers? MPS sells through third-party distributors, value-added resellers, direct end customers, original design manufacturers, or ODMs, and original equipment manufacturers, or OEMs. So they have a broad end market customer diversification. Is it number one in its industry? Well, it is not. But according to Morningstar, monolithic chips drive high performance, share gains, and a wide moat for MPS. That's important that, it has a moat, something that is difficult for its competitors to compete with. In this article, it says Monolithic Power Systems second quarter results were strong and third quarter guidance was even better. Sales rose 48% over year to $981 million and guidance calls for 56% year-over-year growth in September. This was 1st of May 2026 report. Management raised its enterprise data growth guidance to 130% in 2026, up from 85%. Monolithic Power Systems is a disruptor in the power management chip market. That's a good keyword, disruptor. So it is a disruptor in the power management chip market using its proprietary process technology to differentiate from larger competitors. In our view, MPS differentiates from larger incumbents via its unique fabless model with which it develops advanced manufacturing processes that integrate many functions on a single chip to offer a smaller form factor and greater energy efficiency to its customers. So it has a wide moat. That's a good thing for MPS. That's one thing that we look for in a company. Now let's go back to TipRanks. From the top analysts, its analyst rating is strong buy. It has 10 top analysts giving their ratings, and 9 of them recommend buy. Its target price is $1,837 on average, the lowest being $1,570, and the highest $2,100. And what I try to do is try to get an analyst forecast from a firm that I'm familiar with. Usually I would go for Goldman Sachs, and if there isn't Goldman Sachs, then I would normally look for a Citi analyst. In this case, we have Kelsey Chia, and her star rating is 4 and a bit, and her price target is $1,820. And you can look at the article that has the story about the review, which is this one. Okay, Monolithic Power. This is an article from July 31st, 2026. Citi analyst Kelsey Chia reiterated a buy rating on Monolithic Power and set a price target of $1,820. And that is 38% upside. Chia has an average return of 64.6% when recommending Monolithic Power. So the price target I'm setting for the stock that I will be purchasing is going to be $1,820. Now let's look at simply Wall Street. Okay, for Monolithic Power Systems, its Snowflake, its future growth in the Snowflake analysis, it's 6 out of 6, which is good. That is very good. And also the financial health is 6 out of 6, which is also very good. And the other 3 for valuation, it's only 1 out of 6, which is not so good, but we'll see how it is as compared to its peers and its industry. And the past performance is 3 out of 6, which is also good. And the dividend is 0, which I'm not too worried because I don't look at the dividend for the stocks that I purchase. Now for the valuation, it is considered overvalued. That's why the Snowflake score was 1 out of 6. So it's overvalued by 53.1%. Okay, its fair value is supposed to be $859, but its current price is $1,300. And if we compare its price to earnings ratio versus its peers, it's 80.7 times. which is larger than the peer average of 62.7 times, but it's valued better than Astra Labs or Mecom Technology Solutions. So its price to earnings ratio for Monolithic Power Systems is 80.7 times. Okay, if we compare it with its industry, the industry average price to earnings ratio is 46 times, and MPS or ticker MPWR, Empower, it's 80.7 times, so it's still larger than the industry average. That's why it's considered expensive. But for my stocks, I look more on the future growth and the financial health. So as long as these 2 points, the future growth and financial health, are 3 out of 6 or better, then I would consider taking the stock. So what is PE ratio? It tells you how much investors are paying for $1 of a company's annual earnings. So a PE ratio of 80 times means we are paying 80 times its earnings. We use the PE ratio as comparison with other companies of similar business and others within the same industry. Let's look at its past performance. Its earnings growth rate is 32.98%, and its EPS growth rate is 32.1%, and its earnings growth rate as compared to the industry growth is better. The industry growth is 27.66%. Its revenue growth rate is 19.17%, return on equity 20.59%, net margin 24.5%. So this is an important one. The important one is that its earnings growth rate of 32.98% is better than the industry growth for semiconductor, which is 27.66%. What is earnings growth rate? Earnings growth rate measures how fast the company's total net income is growing year over year. And EPS growth rate measures how fast profit per share is growing. Let's look at its financial health. 0% of debt to equity ratio. And in fact, for the last 5 years, or even many years, its debt has been zero all the way. So it's good that it doesn't have any debt. Okay, now let's look at its free cash flow. Its free cash flow is well below its revenue. Ideally, the free cash flow should be about its earnings, which is generally the textbook healthy signal. That means the company's reported profit is real spendable cash. In the case of MPS, given the company is mid-ramp on $6 billion manufacturing capacity expansion and scaling fast into AI and data center demand, an FCF or free cash flow below earnings gap right now reads more like the company is investing its cash for growth. Now about the CEO. The CEO is Michael R. Hsing. Michael Hsing founded MPS in 1997 and currently serves as chairman of the board, president, and chief executive officer. Prior to founding MPS, Mr. Hsing was a senior silicon technology developer at several analog IC companies where he developed and patented key technologies which set new standards in the power electronics industry. In 2004, Mr. Hsing took the company IPO. Under his leadership, MPS is constantly creating cutting-edge products to improve the quality of life with green, easy-to-use system solutions. That's a photo of Mr. Hsing. From Forbes, his real-time net worth is $2 billion. He owns 2% of the company. He's an inventor on numerous patents related to the process development of bipolar mixed signal semiconductor manufacturing. In TipRanks, they give us what the bulls say and what the bears say. In essence, what the bears say are the risks that we should know what the company may be facing. First one is capacity ramp execution risk. Okay, building the front-end, back-end ecosystem for larger than $6 billion capacity entails multi-site qualification, module assembly complexity, and supply chain coordination. Execution delays or qualification failures could defer revenue, compress near-term margins, and raise costs, making capacity builds a material operational risk over the next several quarters. Second risk to consider, early stage program timing uncertainty. Key growth initiatives are at sampling or early order stages. Conversion timelines to volume are uncertain. If design to production cycles slip or customer adoption lags, expected multi-year revenue streams may be delayed, reducing predictable growth visibility and stressing near-term capacity utilization planning. The third risk is non-recurring profit spike and cash lumpiness. A pronounced 2024 profit outlier and episodic cash conversion variability indicate earnings comparability issues. Reliance on one-off items or timing distortions complicates forecasting and could mask through sustainable margin and ROE trends, increasing downside surprise risk when one-offs normalize. Okay, so after this, as soon as the market opens in New York, I will be purchasing MPWR, $100 in value. Good morning, New York. Today is the 24th August 2026. The time is 13 past 10 o'clock in New York. I'm going to buy another stock today, and it's going to be Monolithic Power with its ticker MPWR. And currently it's still strong buy with 10 analysts giving their forecasts. The average target price is $1,837, and I will be using the price target given by Kelsey Chia of Citi, which is $1,820, and the price target upside is 42%. Let's check out Simply Wall Street, future growth 6 out of 6, financial health also 6 out of 6. And now let's go to my broker's platform. It is Monolithic Power Systems, and I will be buying a quantity of $100 with market order. So I'm executing the buy now. Order executed. I bought MPWR with a quantity of 0.07785, and the price that I got it with was $1,279.18. So now in my portfolio, I have 5 stocks: Devon, ASML, VRT, JBL, and this last one, MPWR, Monolithic Power Systems. Quick reminder, everything here is for education and entertainment, not financial advice. This is my own real money experiment. I'm not a licensed advisor. Do your own research or talk to one before you invest. If this helped, hit like and subscribe for the next pick.